You guided to the lower end of your previous revenue range. Can you specify a little bit with more clarity what we're looking for at the end of the year?
The previous guidance was that we would expect clean revenues to be around 8.6 billion. The performance for the first 3 quarters has shown that we are approaching the 8.6, but probably from the lower end. The main reason lies in the Treasury performance, given the pretty slow markets, and you have seen that elsewhere also. There is a little bit less revenue than we would have expected. So as much as we like the performance of our 2 operating segments, it's mainly the Treasury performance which keeps us a little bit behind the original expectation.
With regards to profits, you were fairly clear, or at least I think you said it's a valid assumption when someone suggested maybe 100 million euros or around thereabouts this year. What about next year? I mean, because you talk about the negative interest rate scenario, and I don't really see that changing in 2018.
First of all, indeed, 100 million is what I said is probably a valid assumption for the net profit for our 2017 performance. And that obviously includes all the restructuring fees and the other things which have been discussed in previous quarters. It's probably too early to talk about 2018 in general. I think that needs to be part of our usual 2018 guidance around the annual press conference. But let me say that much. Indeed, the interest rate environment will not go away. That is not the assumption. Yes, we are pretty well geared towards rising interest rates, but I wouldn't expect them to move in 2018. We have said that interest rates, negative interest rates, will still move into the NII line through our model deposits mainly, but I think that is a manageable size by now. And as I said before, if we can grow the way we have grown this year, I'm pretty much optimistic that we can tackle that.